fine. So my screen is visible to all of you?
Yes, sir.
Okay, okay, fine. So in the last class, actually, there was one issue in the master data, right? And due to that issue in the master data, our document splitting was some problem while making the document splitting. Uh, some errors or issues arises. So what is that errors or issues in the master data, due to which those things happens? Let us discuss. So I have created some cost centers, I have created some profit centers, and also I have created some segments in your case. Okay, the controlling area is 7200, right? So let us see which are the cost center, profit center, and segments I have created for you. Okay, so now actually I have created, say, department X. In the previous class I have created department X and department Y. These are the two cost centers. And this department X, while creating the department X, some areas was mandatory, like business area, hierarchy. So these things was mandatory. Without these things, you cannot able to save your cost center. So definitely compulsorily we have to give the business area, right? But business area is a very old concept. Previously, when segment concept was not there in SAP, then normally business area was used as segments. But when segment came, then business area is no more used, because that segment is used for the purpose of segment reporting. So in order to that, I don't have to, I will not go use this business area henceforth, but it was compulsory. So why it was compulsory? I make it suppressed. I make it some changes in the global parameters, so that the business area was not compulsory. And whenever any further cost centers were created, then business area is no more required. Similar, for that purpose, I create two more cost centers, that is department A and department B. Because department X and Y was already there, I want to, if I want to change that business area from the master data, it was not possible, because in that master data already data has been posted. So if some information has been posted or line item has been generated under the department X and Y, then that business area link in the master data, it is not able to, removing it is not possible. So that's why I create another two cost centers. See, in this cost center, your business area is not there, because the business area was not mandatory, and I omitted this because it was creating problem in the document splitting. So from where I did this, there is a transaction code OBY6. All of you know this is global parameters, and global parameters is something which shows the basic customizations which has been done in relation to GL accounting at a single place. So I click on 7200, right? This is your global parameter screen. In this global parameter screen, what is the company code name, what is the country, what is the currency, what is the language, chart of account, group company, fiscal year, field status variant, posting period variant, everything is there. But later on I had selected some of the checkboxes. So this checkbox I had selected business area financial statements. That means my financial statement can be prepared, or my profit and loss account and balance sheet can be prepared business area wise. But this is not the requirement. My requirement is, as per the accounting standard or IFRS or Ind AS, I have to prepare segment wise financial statement, or segment wise profit and loss account and segment wise balance sheet. But business area wise is not required, because segment will be used. So therefore, as I was make it tick mark was there. Therefore, whenever I create any master data of cost center, this business area was compulsory. That means I had to put the business area. Otherwise, this master data was not possible. So therefore, I created two numbers of cost center after deactivating or deselecting this. So I deselect this and save. So in your case also, mind it, whenever you will do, you have to deselect the business area financial statement and save it. In the global parameter, it is not required to be selected. Okay, so I came back, I'm coming back. So now I have created two numbers of cost center. One is department A. Let us see it. So every cost center is linked to a profit center. So my previous profit center was department X and it is linked to my cost center department A. Similarly, there is a cost center department B and it is linked with department Y, right? So there are two numbers of cost center which are linked to two numbers of profit center, right? Business area is not at all there. Similarly, let us go to the profit center. So what are the profit center I have created? Is same as usual. Those profit centers, there are no issues. Let us go to the profit center, display KE53. So click on the drop down. So this is the controlling area. Click on the execute. See, these are the two profit centers. Let us see a profit center in details. This profit center department X is linked with the laptop, right? I have two segments. One is laptop, another is desktop. So another profit center is there. So this is linked with desktop, right? Two numbers of profit centers. Profit centers are there, two numbers, and respective segment like laptop and desktop is also linked with respective profit center. So that was the thing. Then I want to go for demonstration of the document splitting. So if I go for the document splitting, zero balance clearing is there and you understand how the zero balance clearing happens. And zero balance clearing, extra zero balance line item is created for the purpose of a complete financial statement, profit center wise as well as a segment wise. The fundamentals of this I have already make you understood in previous classes. So this once this document splitting is active, this is active not only for the GL accounting chapter, but this is applicable for the accounts payable, accounts receivable, asset accounting. So for every financial accounting chapter, this document splitting is applicable. I was trying to demonstrate the document splitting only for the purpose of GL entries, JVs. But if I will show you entries in accounts payable or receivable, then you can really see how this things works. So accounts payable has not been started. We are in the GL chapter. Let us see one entry in the GL, but in another company code, I have another company code where I have already customized the accounts payable. So from there itself, I will show you how document splitting happens. And again, when your accounts payable will be there, you can also able to see the same thing, right? So that your realization regarding the document splitting, how the document is splitted, how the line item is splitted, that will be more accurate. You will realize everything in more details rather than JV kinds of things. So anyway, we are passing a JV and again see how these things happens. The transaction code is FB50. Then change my company code. 7200 is the company code. Put today's date. Okay. So I'm giving the GL account. Suppose I am giving the GL account, say basic salary, right? This is debit. Say 50,000 is the basic salary. So I'm giving the text, say salary JV or salary payment, and I'm going to the cost center. This is an expenses account, so I'm going to the cost center. So once I go to the cost center, I will not use this X and Y because that business area assignment, it was creating problem. I am using the fresh cost center. What is there? Department A, then 400, 100, again debit, say 40,000. Then this is plus, and this is another, this is for another department, say this is for department B, and we are paying the bank, we are paying it from bank, say we are crediting the bank, and this is credit, and the bank will be having definitely a area where the payment is released. Suppose the payment is see, these are the two expenses accounts, so therefore I selected the cost center, but bank is not a expenses account. So in this case I cannot select the cost center. I'm not going to select a cost center, but I am selecting a profit center. Okay, let us select a profit center. Okay, so let us see the profit center, department Y, and click on enter. Right, once I click on enter, see X and Y is automatically copied. How it is automatically copied? Because in the master data of cost center, see these two line items is cost center A and cost center B. In the cost center A, automatically profit center is already given in the master data, and cost center B, the profit center department Y is given also in the master data, but total 90,000 is paid on behalf of the department Y, right? Then I have to go to the document simulate general ledger. See, there are two kinds of things. One is normal simulate, another is simulate general ledger, right? I have to simulate the document GL wise. While I am simulating the document GL wise, I see department wise the document is balanced. What are the two departments or what are the two profit centers? Department Y and department X. In the department Y, I have paid the basic salary of 40,000, which is the expenses, but the total amount paid is also from the department Y, that is from the bank account. So 40,000 debit and 90,000 credit. So the balancing figure is 50,000, for which automatically zero balance clearing account is populated, right? So segment wise profit and loss account as well as balance sheet segment wise, similarly profit center wise profit and loss account and profit center wise balance sheet will also be possible, because this particular entry is balanced. This particular entry is balanced profit center wise as well as segment wise. Okay, similarly on the department X also this things is balanced. 50,000 is the basic salary which is debited, and a zero balance clearing account is also created, 50,000 minus. Actually, if the total document is in fact this is profit center wise, but as a company code as a whole, if I want to see the trial balance, then this zero balance clearing 50,000 debit and zero balance clearing 50,000 credit, it will be removed, because this debit credit will be automatically cancelled. I have already shown you how in the company zero balance clearing is always balanced. There is no balance left in this general ledger account 200 099, right? So for profit center wise or segment wise, zero balance clearing is having a value, but company code as a whole there is no balance, and zero balance clearing is always zero. The balance is always zero, right? So that is the thing what is required. So I want to click on save. Just a minute. Balancing field business area, again it is asking for business area in the line item 001. Just a minute, let me see. Previously it was not there because I have removed the business area. but again it is why again it is asking. Okay, just a minute, let me see. Accounting controlling, profit center accounting, let us display department Y. Okay, department X, nothing is there. So cost center, let us see. Display department B. Okay, business area is not there. Let us go to the OBY6. OBY6 7200. So this is 7200. Business area financial statement, it's removed. Okay, fine. Let us try again. Okay, I'm trying again to post the document. 400, 100, debit, say 50,000. Say this is the text. Department A. Say again I'm paying the salary. Credit 60,000. This is debit. This is department B, and 2 lakhs. Sorry, this is also debit. This is credit. Amount is star. This is plus. Say this is also say department B. This is also say department A. Okay, then I will click on save. Same thing is showing business area field. Okay, balancing field business area in line item 001 is not filled. Okay, see, somebody is also changing the customization area, because that area is I'm going to that area. Due to that only the problem arises. See, you are working in such a software where thousands or hundreds of people are using. So in the customization, if I don't require the business area, then there is no use of activating the document splitting business area wise. I had deactivated, but somebody has activated, some user, because thousands of users are there. Somebody has activated the business area wise document splitting. Let us go to that. Again I will deactivate and I will try to post it. So I am going to the document splitting. See, while demonstrating the document splitting, also practicing document splitting, this kinds of things will be there. So we will just understand and suppress this subject. Otherwise anytime error will arise. People will, users will do their own, and it is applicable for all company codes, because the same customization area is applicable. It is at the client level. This one, define document splitting characteristics for general ledger. Yes, see, I had deactivated this check marks. I don't need the document splitting in business area level, right? So document splitting will be applicable for profit center and segment. So therefore I had deactivated these two things. But some users, they require also this business area wise. So they have activated this and maybe for any other purpose somebody has activated. So that's why this things is coming. I am just deactivating. I am suppressing these things. Then I will try to post the document, because I don't need business area. Segment and profit center is enough. Let us come back again. See, okay, fine. So now let us post the document again. This will, okay, again I have to post /n mp50. Let's see, because I have already suppressed those areas, it should be no more. System is slow. Okay, fine. So this one 400, 100. This is 60,000, say. This is salary. Say this is cost center. Similarly 400, 100. Debit 50,000. This one, this is say department B, and let's have bank account. Credit amount is star. This is plus. Say this is also paid from department B. Click on enter and click on save. Fine. Now the document is posted. Document number 56. Somebody has make it mandatory. I don't need business area. So if I don't need business area, in the in here document splitting characteristics also, I have to just remove that checkbox. Unless and until I will remove the checkbox and I don't have any business area, then automatically problem will start in the system. So once this document is passed, let us see the document FB03. Okay, so this is the last document number. Click on the document. See, this is the entry view, right? This is the entry view. But in this view, trial balance can be prepared? No, trial balance cannot be prepared, because in the department X profit center 60,000 is debited, but there is no credit in the department X profit center. Suppose I want to prepare a trial balance of department X, because whenever somebody wants to prepare the balance sheet and profit and loss account, first of all, what it has to prepare? It has to prepare the trial balance. So first of all, when for this accounting entry, if I want to prepare the trial balance for department X, because my purpose is to prepare the profit and loss account and balance sheet for department X. So in this case, my trial balance will not tally. So only 60,000 debit will be there. There is no credit against this 60,000 in department X trial balance. So I cannot prepare a balance sheet, profit and loss account. Similarly, I also cannot prepare the segment. So what happens? Really, the document is saved in in a different way. This is the entry view. The way I have passed the document, it is showing here, but in the system background, the document is saved like this, right? In the system background, the document is saved like this. How the document is saved? See, in the department X, suppose in the department X, salary 60,000 debit. Similarly, in the zero balance clearing account, there is a 60,000 credit in department X. Suppose I want to see it. I want to see the document. I want to see the document ascending order, profit center wise ascending order. What happened? Once I select the ascending order for the profit center, the entire document is, see, these cells are merged. What does it mean? Merged. Department X, there are two line items. One is debit, one is credit. Similarly, laptop, there are two line items. So segment wise or profit center wise, trial is very well possible. Similarly, for department Y, there are three line items: 50,000 debit, 60,000 debit, and 1,10,000 credit. So department Y also able to prepare a full-fledged trial balance, taking three numbers of line items, right? So in this case, due to the zero balance clearing, we can prepare the profit center wise as well as segment wise balance sheet and profit and loss account, right? So really there is another way, very complicated way, the document splitting happens in the accounts payable, right? As you have not in the accounts payable, so I am going to another company code where I will show how the document is splitted. Let us pass a document FB60 in a different company code, not in your company code, right? So I am changing the company code. okay, it is SIL. There is a company code name SIL. I am passing a document. So I have to give a vendor number. You will see how systematic way the document is splitted, right? This is one vendor. I am putting the date, today's date, right? Then I am putting again enter. Then I am going to the GL account, right? So GL account, let us have your say conversion charges. Okay, conversion charges, that is one expenses which starts with GL4. Number starts with 4, say 25,000. This is an expenses. So say vendor invoice posting, and I am selecting a cost center. This is an expenses, so that's why I am selecting a cost center. And the name of this cost center, let us see what are the cost centers here. One cost center is department A, right? Similarly, same expenses 289, but say 35,000. This is plus, then this is, say it is paid for department B. That conversion charges is paid for department B. And finally, these are the two things which are the expenses belongs to department A and B. Then click on enter. Once I click on enter, it is giving me some message. Don't care for the message. Don't care for the message, right? Very simple journal entry I have passed. Then I will go to the document, simulate general ledger. Again I click on enter. Again I click on enter. Again I click on enter. Okay. Just a minute. I have made a mistake. I have not made the balance is 60,000 actually. I have put the expenses debit both the line items here. So here I have to put the expenses 60,000, right? So that the balance will be 0, right? The balance is 0 now. Then I can go to the document, simulate general ledger. It is giving me a message. Don't care for the message. Click on enter. See, this is the real document splitting actually. This is the real document splitting which happens. See, though I have paid 35,000 for conversion charges and 25,000 for conversion charges, but sundry creditor, how much amount I have entered? I have entered the amount as 60,000. So 60,000 is bifurcated between the ratio of 35,000 and 25,000. Again, TDS payable, 2% TDS is applicable here. So automatically 2% TDS is also showing here. TDS payable 700 and 500 rupees. And the document is completely splitted. So real splitting happens here. Real splitting happens here. And there is no need for zero balance clearing here. I have already told you that zero balance clearing happens when there is something where there is a cross profit center. Cross profit center means some profit center will be debited and some profit center will be credited. Here both the profit centers, both the expenses 35 and 25, these are debited. So accordingly there is no question of zero balance clearing. So the credit item 60,000, that is also splitted. 60,000 is splitted in the ratio of 35 is to 25, and automatically 60,000 is splitted at 34,300 and 24,500, and 700 rupees and 500 rupees TDS payable is also generated. So this is a real case of document splitting which happens. The end user passed the entry with a very few effort, but due to the document splitting, that system looks like this. So this is from a different company code, not in your company code because you have not gone so far. So once you will do the accounts payable also, I will show you the same thing, right? So this is the document which is posted 1004. And from the document label, if you want to see, you will go to the FB03. Document number 1004 is coming, just put enter. If you put enter, you cannot see the real profit center wise and segment wise everything. See, this is the vendor 58,800 and this is TDS payable, this is conversion charges. But from this, is it possible to prepare the balance sheet or trial balances or profit and loss account? No. First of all, trial balances will not be possible because some of the line items no profit center and segment is showing, because this is an entry view. There is a view here. See what is showing here, display document data entry view. That means the user have entered in this manner. But is the document still there in the database like this? No, the document is converted in the background. The document is converted like this. Okay, so once I click here and selecting in ascending order, see what happens. Here department A, there are 3 line items, profit center department A, as well as segment laptop, there are 3 line items, and department B, segment desktop, there are 3 line items. So these 3 line items which is showing here, it is balanced. So once it is balanced, individual department profit center wise as well as segment wise trial balance will be possible. So what happens, the end user will pass the entries, but in the background a full-fledged trial balance profit center wise and segment wise will be possible. And once a full-fledged trial balance of the profit center and segment wise possible, then we can prepare the segment wise profit and loss account and balance sheet, and profit center wise profit and loss account and balance sheet. Segment wise financial statement is the requirement of the Companies Act, IFRS, as well as Ind AS. Similarly, profit center wise financial statement is the requirement of management, requirement is of the controlling, requirement of the organization internally, right? So this is the way the document splitting is generated. So we will close the document splitting. Till now I'm just closing the document splitting and I will do the other activities. So how to deactivate the document splitting or close the document splitting process? See, sometimes you activate the document splitting and somebody will select that business area what I have deactivated and came to this screen, then error will be there, because document splitting will be applicable for all transactions in FI area. So it is better to deactivate and we will go to the next process. So how to deactivate? I will go to the general ledger accounting, business transaction, document splitting. Here there is a active document splitting, right? So these things also we had done in the first class, in the initial classes, when this procedure has not been adopted. I have to click on deactivation for company code. So what is my company code? 7200, right? While starting the document splitting, I had it was previously inactive. So again I am putting it as inactive, right? Once I put it inactive and save, then nothing, no error or nothing will be applicable on me, because I have, though I have made all the customization, but I have made it inactive. When I will make active, when accounts payable chapter I will do, then I will make active and again show you how document splitting is applicable, because some of the components of the document splitting is at the client level, and the students or the person who are linked with the server, they will freely play those things, change those things, so that we will be in trouble, error will come. That's why I am making it inactive, right? So till now the document splitting is over. Then we will go to the next area, right? And the next area is your foreign currency. Okay, let us open one Excel sheet. We will try to understand what is foreign currency, what are the uses of foreign currency, and how to configure everything for in foreign currency, so that foreign currency transactions will happen in our system. So let us open this. Okay. So Now I am opening a sheet. Okay. Foreign currency transactions. Okay. So what is foreign currency transactions? Let us understand. Suppose you are purchasing materials from US. Okay, you are purchasing material from US. So in this case, you have to pay the vendor in US dollar, right? So whenever any invoice you are going to get from the US, that invoice also having US dollar, it is not there in Indian currency. So whenever you will pass the invoice, on the date of passing the invoice, suppose you are passing the invoice on today's date, 29/11/2022, then what is the exchange rate between US dollar and Indian currency today? So that will be applicable for that invoice. Or it may happens that there will be a understanding between your party vendor that this is the rate which is applicable for this invoice. Suppose today's rate is say 80 rupees. 1 US dollar is equal to foreign Indian currency 80. So today's rate is 80. There are two options. Whenever you pass that transaction, that transaction will be saved in Indian currency, taking the today's exchange rate which is uploaded or which is updated in the SAP system. Or it may happens that you can manually put the value. Suppose in that particular, the vendor has mentioned that 78 rupees. Suppose at the time of dispatching the material from US, 78 rupees was the exchange rate between US dollar and Indian currency. So it may be negotiated between your buyer and seller that from the date it is dispatched, starting dispatched from US, that rate will be applicable. So it is the negotiation between the buyer and seller. But the important thing is how this foreign exchange rate or conversion rate or the exchange rate will be updated in SAP, and that will be automatically picked up while passing a foreign currency transaction. Or if we want to give the manual value, manual exchange rate, how it will be possible. So there is a exchange rate table in SAP, and normally what happened, the users have to update the table. Okay, the users have to update the table, and basing on the rate, automatically the value is picked up. See, there are three types of exchange rates normally used in SAP. One is bank buying rate. Bank buying rate, right? Another is bank selling rate, right? Another is average rate, right? So what is these three things? First of all, we have to understand, as a professional students or professionally qualified, you must know what is the bank buying rate and what is the bank selling rate and what is the average rate in foreign currency transactions. Okay, so what is bank buying rate? What does it means? Normally what happened, suppose we want to pay to the vendor, okay, US vendor, but we have INR, we belongs to India, we have only INR, Indian currency. So how we will going to pay the vendor in US? So in this case, we have to buy the currency from the bank, okay, or we have to make the transaction through the bank, through which the bank will pay to the US party and get INR from you, right? Suppose today the exchange rate is say 80 rupees. 1 US dollar is equal to 80 INR, right? Suppose this is the rate, and in this case suppose you have to purchase US dollar, right? And you go to the bank, then the bank will sell the US dollar. So in this case, if you go to the bank, though the today's rate is 1 USD is equal to 80 INR, but if you go to the bank will charge you like this: 1 US dollar is equal to 82 INR, right? Suppose you have got some US dollar due to export. Whenever some organization will export, then they earn foreign currency, and this currency is exchanged in the bank and converted into INR. So bank will buy your foreign currency and give you INR. So whenever the bank will buy, it may charge you like this. So it may charge you 79, right? So in case of buying, the bank is charging less than 80. In case of selling, the bank is charging more than 80. So what is the profit of the bank? The profit of the bank is the differential between this. Okay, so the bank will always buy at a low rate and sell at a high rate. That means if you want, whenever selling is required, suppose you have to pay to a foreign vendor, then you require US dollar, then you have to deposit more INR. But suppose you are an exporter and converting your US dollar into INR, then the bank will pay you less. Okay, and this is called bank buying rate, and this is called bank selling rate, right? And this is called G type. In SAP terminology, G type is called bank buying rate, and S type, sorry, B type, okay, B type is called bank's buying rate, bank selling rate, and G type is called bank buying rate, and M type is called average rate. So what is average rate? Average rate is between the rate of buying and selling. Say this is the average rate. Okay, this is the average rate. So there are three kinds of situations. One is bank buying rate, one is bank selling rate, another is average rate. And in SAP SAP ERP, there are different denomination. There are different identifications of this. Nobody tells in a very long lengthy way that bank selling rate or bank buying rate or average rate, but people will talk in SAP community like G type, B type, M type, like that, right? So now this is the thing, and the purpose of these three rates you very well know, and when the business will use which rate is relevant for which business activities also you know. Now let us go to the foreign exchange table. Before going to the foreign exchange table, there is a ratio of exchange. Ratio of exchange means say what is the ratio between foreign currency, suppose USD and INR. So we do the ratio is 1:2. We do the ratio as 1:, say 1:1, right? So it is converted into like this: but my intention was 1:1. So 1 US dollar and one just a minute. No, it is not happening. Things has been changed. Okay. So let us have 1:1, right? So 1 US dollar is how much INR? So it may be, that means they are treated at par. So if now 1 US dollar is actually say 80 rupees, right? So similarly, say euro versus INR. So euro versus INR, the ratio is also 1:1. Okay, there is no there is no weightage that is given to the both currencies. They are 1:1 ratio, right? Sometimes some currency ratio may be different, 1:100 or like that. So one is 1, another is weighted of 100. That means what will be the exchange rate? 100 will be multiplied. Normally the countries where there is a lot of fluctuations or the value is very less, currency value is very less, then in those cases 1:100, 1:20, 1:50 is used, but almost all it is 1:1. So 1 US dollar, then 1:1 means if 1 is multiplied on the USD, then 80 will be multiplied with 1 INR also, that means 80. So now it is 80, tomorrow it may be 81, 82, like this. Similarly euro INR, that is also same thing, right? So this is the ratio. So there is a ratio of exchange, and these are the different terminologies which are used in SAP. Let us go to the customizing screen directly, and we will create the ratio there, and we will update the exchange rate table, and we will see how these things are picked up. Okay, fine. So any questions on your behalf regarding foreign currency? Any questions regarding foreign currency transactions, foreign exchange, bank buying rate, bank selling rate, average rate? No questions? Okay, fine. So I'm going to I'm going to the okay. So now let us go to the exchange rate customizations. This is SPRO. Click on the SAP reference IMG. The system is a bit slow today. System is very slow. What happened? The system is very slow today. Okay, network connection is also gone. So in between the network also gone. So am I audible?
Sir.
Okay, okay. Actually, there was that was severe network problem in between. Even my SAP was not opening, and also network gone, and again network coming. I'm going to the foreign exchange customizations. Let us go to the SPRO area. Okay, fine. Now it is fine. Let us go to the SAP reference IMG. Okay, fine. So this foreign currency and its related tables and everything, this is in SAP NetWeaver, right? This is not there in financial accounting or controlling or anything else, or enterprise structure. This is there in SAP NetWeaver. Let us click on the NetWeaver, then go click on the general settings, right? And there is currencies here. Click on this node, and here we can check the different exchange rate types. So what are the different exchange rate types? There are so many exchange rate types are here, but three types are very important. One is G type, exchange rate type G. This is standard translation at bank buying rate, and M, that is standard translation at average rate, and another rate which is called B type, and this is standard translation at bank selling rate, right? So these are the three rates which are relevant. Other rates has been created by the user, so this is as per the user, but these are the three standard rates which are used for the SAP purpose. So we don't have to create any new exchange rate type, but these three exchange rate types will be more than sufficient for us. Then define translation ratios for currency translation. So translation ratios, I had already told you regarding the ratios. Let us click here. See, suppose I click on the position button. Now let us, in this case, let us take the exchange rate type AM always. That means average rate. So from currency US dollar to currency INR. Let us see the ratio. See, US dollar and INR 1st April 2022, the ratio is 1:1. That means no weightage is given to the respective currencies, but these are at par. So if today one US dollar is equal to 80 INR, or 1 will be multiplied with 1 and 80 will be multiplied with 1, so 1 US dollar is equal to 80 rupees. So from US dollar to INR, and valid from 1st April 2022. This is the ratio. And let us go to the exchange rate table. So this is the table where we have to update the exchange rate so that the transactions will be automatically passed, taking the nearest exchange rate. Click on the position button. Put the exchange rate type AM from currency USD to currency INR and put enter, right? So here the latest exchange rate is 31st August 2022. What is the rate? 80.24. That is the rate, right? So before that, on 30 August it was 80, and on 31st July this was 79, right? So today, if I go to pass a transaction today, 29th September, automatically the system will pick up this rate. The system will pick up this rate. But if I want to, how the system will pick up this rate, let us pass a transaction and see it. Okay, I am opening another session. Automatically it will. So how to update the exchange rate table? Let us show you. Suppose say I want to update the rate on say 1st September. So what I will do, the instead of no new entries, I can just copy the previous one. I will click on the copy as. I will change the date. I am putting the date 1st November 2022. I am giving it the rate as say 81. Enter and click on save. Right? So what happened? So 31st August I have updated a rate as 1st November, right? So actually daily I have to update the rate. Daily my end user will update the rate, so that automatically it will be pick up, right? So this is a daily activity. So I am taking M as average rate for my transaction. Suppose today is 29th November, right? So the latest rate is 1st November. Let us pass a transaction in foreign currency. Let us open another session. Now FB50 I am passing the entry, right? So document date is say 29th September 2022. Now the currency is showing as INR. I am changing the currency as US dollar, because in the drop down all the currencies are there. So US dollar is also there. So this is US dollar. Suppose I want to pay the salary to foreign technicians who are working in my organization. Suppose $1,000 I want to give salary in USD. Suppose I am selecting one department A and 2 lakhs is the bank account. This is credit, amount is star, text is plus, put enter, right? So now this entry is passed in US dollar. So what is the US dollar? So I'm putting 10,000 US dollar. I'm changing it to 1,000, 1000, right? I'm also changing this 1,000 because it will be easier. Okay, this is 1,000 US dollar. So this entry can be saved in my SAP system. Whenever I save the SAP system, it will be saved in 3 currencies. What is the 3 currencies? One is your document currency or transaction currency. Another is your company code currency. Another is your group currency, right? So let us save the document first, right? So this is the document number 57. Let us see the document FB03 57 and enter. So now once I enter, it is showing 1,000 US dollar, but in my company code uses INR. So for that purpose, the document is converted into local currency, document currency or transaction currency, and this is US dollar. What is the local currency? Select the local currency and continue. The local currency is INR. Now it is picking the value 81,000. How it is picking the value? Because in the foreign exchange table I have updated 1 US dollar is equal to 81 rupees, which is the latest one, right? Which is the latest one from 1st November. Actually it should be updated daily. So the foreign exchange, from the foreign exchange table, when the transaction is passed, it will automatically pick up the latest rate. So that's why it has picked up the 81,000, right? So if I want to have the another currency, that is group currency, so you know that my group currency is euro, right? So it is also shown in euro. So how it is shown in euro? Because in the foreign exchange table also there is a exchange rate which is already existing, euro versus INR, right? So therefore it is already showing like this. So this is the way the things works. But sometimes it may happens that the user wants to put the exchange rate manually. So how to do that? For doing that, I cannot use FB50. I have to use F-02, right? So here, suppose I want to pass one entry. Okay, this is the this is also another way of saving the transaction in GL entry. Here I change it to US dollar and I put here 83. Okay, then I put here 400 100, that is salary, and click on enter. Once I click on enter, what will happen? The In the status bar there is a yellow message. What is the yellow message saying? It is saying that exchange rate 83 deviates from the table rate 81 by 2.4%. What does it mean? Because in the exchange rate table, my exchange rate is 1 US dollar is equal to 81 INR. However, I am passing the transaction manually giving 1 USD versus INR, that is 83 rupees. So that's why the system is showing me the deviations, because it is deviating from the table rate, because table rate is 81, right? This is the yellow message. I cannot, I may not consider this message. Just don't care for the message. So you can go that I'm putting the value 1000. So say salary in US dollar, and this is posting key 50 means credit.